And there we go. Hey everyone, hope you're all doing well. Hope you're all having brilliant, fantastic, amazing days as always. Welcome back to another video. Today I'm going to be answering another commonly asked question. Let me just adjust my laptop a little bit first. So today, the commonly asked question is, should you follow signals, okay, or should you use your own strategy? Okay, and what are my thoughts? What are my opinions? This should be a short, snippet little video, but it's a good question. It's a really good one. And, to be as boring as ever, my answer is going to be a combined approach, but let me explain why. So I've written down here, as I always do, all my notes, my little notepad, all my thoughts, my opinions, to try and convey as much knowledge from my own personal experience as I can. And yeah, break it down into, a concise short video. So let's begin. Now, first, if you don't know what signals are, okay, I'll quickly go through this before we jump into all the points. Because there are some beginners out there that won't know what signals are. Signals are essentially, group chats, typically channels that send out notifications of buying and selling, instruments at any given time. There'll be group chats that are, specifically specialized on certain instruments, FX pairs, gold, indices, crypto, and people can pay subscriptions to follow these channels, and then essentially they will get trades sent through that they can, participate in if they want to or not. FXLondon, for instance, has a few different trade channels. We have, as of the moment, FX, gold, indices, and crypto. And essentially we send out the trades that we take every single day, and if people want to join up, watch them for educational reasons, and understand why we're taking trades and they can learn from them, then they can join for a monthly membership. So essentially that's what signals are, okay, in as brief, concise way as I possibly can say. So now, should you be following signals? Should you be doing your own strategy? Should you be strictly doing either one? Let's answer these questions. So what I firstly said here is that you can't rely on signals, okay? Reason you can't rely on signals is because you are solely basing your success off of someone else's analysis, okay, and off someone else's trades. Whilst they might have a good track record, whilst they might be good, whilst you pay to follow them, your success is based off of them. So if, for instance, they go on holiday, they decide not to trade for 2 weeks, does that mean that you're not going to trade for 2 weeks? Which is the difficulty when it comes into following signals and following them blindly, is that you are based off of their performance. At the same time, you're based off of their activity. If, for instance, you've got a day off, for instance, work perhaps, and you want to spend more time trading, but your signal provider is off ill, what are you going to do? So what I would basically say is you can't follow them blindly either, because if the signals don't perform, then you don't perform, which of course you don't want. You don't want to be reliant on someone else solely, because it isn't wise. So that's one of the negatives. One of the pros that I've written is that signals add another perspective, okay, which I think is really, really good. I think it's one of the benefits of signals. That's why I think they're so popular, is because these channels add another perspective from another person with perhaps a little bit more experience in this selective field than you do, and you can gain an insight into their knowledge for pretty much a relatively low charge. You can get their daily trades, so it's almost like a little cheat hack to success. So you get another perspective, okay. You understand what they're thinking at any given point, and you can choose to follow that or not, and you can definitely learn from it. What I would also say is that you're not restricted just to following one signals channel, okay. There's so many companies out there. There's thousands of different providers that provide signals, of all different instruments. They're all trading, constantly. They're all trading actively. You don't have to join one of them. You can join 3, 4, 5, 10, 15, as many as you want, really. Of course, all of their performance, all of their track records, all of their, their value is going to be different, but you can join multiple of them and you can kind of correlate them between each other. If 4 different channels that you follow and you're subscribed to, are all buying something at the same time, good chance that the analysts of all of those different companies, different service providers, are going to be right if they're all in agreement. So it adds strengths basically to your trade positions, okay, and you can of course use that to your own accordance, and you can figure out whether you want to get into the trade or not. Now my next point is why you perhaps should get your own strategy, okay, and what I would basically say is, as I've said, my general conclusion is that you need a combined approach. But one of the arguments for having your own strategy, okay, is of course that you're not reliant on anyone else. Okay, you can trade on your own terms. You can suit it specifically to your trade style. for instance, some of the signal providers are going to be scalpers, they're going to be day traders, or they're going to be swing traders. That might not suit your trading style. So if you've got your own strategy, your own confluences, you are completely held responsible for everything that you take and everything that you do. And that can sometimes be, better for the psychology. It can also be better for performance. Sometimes having too much noise in terms of having loads of different notifications of all different trades popping up can sometimes mess with your head. Whereas if you don't sign up to any of those subscriptions and you just focus on your own strategy, your own trading, for a lot of people, that is better and it suits their psychology better. And in return, get a better performance. So yeah, that's basically one of the advantages of using your own strategy. Another one of the advantages of of course having your own strategy is if you have your own strategy, then you're probably going to know more about trading. This comes back to the idea of just following signals blindly. Is if you follow signals blindly and you're just relying on signals, you probably don't have much understanding of trading itself. Whereas if you have your own strategy, you've built that own strategy for yourself, you're probably going to have a better understanding of the market. And therefore, if a signal comes into play, you see it, notification for buy this, sell that, you can then go back, check the charts, make your own decision, off of your own strategy as well, off of your own confluences. You can make your own judgment to whether you want to join in on something or not. And basically what I'd say is if you have a better strategy, you've probably got a better understanding of the market, which means you're probably going to make more profit as well because you'll be able to make better informed decisions. So another concluding point is, I've ultimately said signals are great, and why I like the combined approach and why I think you should look into, using and utilizing signals for your advantage is because you don't have to put hours and hours and hours into analysis. Okay, so, you get a notification through saying buy this, sell that. If they've got a really good track record, they're doing well, they send perhaps chart up with it as well. You get that information within a second. Whereas if you're going and doing the research, looking at the news, doing the technical analysis, doing the fundamental analysis, you're checking it all for yourself, it takes a lot of time. And that's why, signal providers can charge money, is because it's time that they're basically exchanging for that. They're giving you, a one-stop shop, essentially. You're getting all this information, all this value, pretty much as soon as they post the trade. So what I would basically say is, signals are brilliant, they're amazing, but don't rely on them. Okay, and that would be my concluding thought, my concluding bit of analysis for the question, basically. So yeah, as always, hope you've enjoyed the video. It's a short one this time, but yeah, a really great question. Really, enjoyed answering that, and I think signals are great, but also having your own strategy is going to be wise. So as always, feel free to click like if you've got some value, got some information out of this. Click subscribe if you want to watch more information videos. We post loads here, and also at the same time, all of the links down below for other YouTube videos, for the Discord community group chat, for the Telegram group chat, they're all going to be down below. So if you want to join any of those, you want to join a community with beginners, intermediate traders, expert traders, we've got some, as I've said in the last video, we've got some Wall Street traders, we've got some complete beginners that have no understanding of anything, all talking, all collaborating on ideas, and it's brilliant. It's a brilliant place for growth. It's a brilliant place for a good community, and I love how interactive and brilliant it is. So as always, enjoy the rest of your day, and I'll see you in the next video. Bye for now.